Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Mao Geping Cosmetics Co. Limited annual report. Mao Geping Cosmetics Co. Limited offers a diverse range of businesses and services in the cosmetics industry. At the core of their operations are the production and distribution of color cosmetics and skincare products under two distinct brands, Mao Geping and Love Keeps. Their product line includes foundation, highlighting and contouring tools, eye and lip makeup products, as well as various skincare items such as face creams, eye care products, facial masks, serums, and cleansers. In addition to manufacturing and selling their own branded products, the company engages in wholesale activities, supplying cosmetics to other businesses. They also operate an e-commerce platform for promoting and selling cosmetic products directly to consumers. Furthermore, Mao Geping Cosmetics Co. Limited manages a makeup artistry training business, providing educational services to individuals interested in pursuing careers in the beauty industry. The company's sales strategy involves both offline and online channels, catering to customers who prefer to shop in physical stores or through digital platforms. This multifaceted approach allows Mao Geping Cosmetics Co. Limited to reach a broad customer base across China, where it is headquartered in Hangzhou. Mao Geping Cosmetics Co. Limited market capitalization of 37 billion is significantly larger than the average industry peer of roughly 0 billion. This shows that Mao Geping Cosmetics Co. Limited holds a significant advantage in their industry. Mao Geping Cosmetics Co. Limited trades at a higher price-to-earnings ratio of 27 times and a higher price-to-book ratio of 7.01 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The balance sheet appears very conservative, with liabilities representing only 22% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Average liabilities have increased consistently as the company expands. Importantly, both assets and shareholder equity have grown at least 20% faster than liabilities, indicating that the business is expanding substantially and generating value after covering its obligations. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually, and the operating income have been increasing. This shows that the business model works and the business is expanding. The company comfortably covers its interest expenses through operating income and maintains a strong cash position relative to current liabilities. The primary drivers of revenue growth or decline can be identified through a thorough analysis of various factors. On the one hand, increased sales volume, expansion into new markets, price increases, branding activities, and digitalization efforts have been significant contributors to revenue growth. These factors have enabled companies to tap into new customer bases, increase their market share, and enhance their brand reputation. On the other hand, decreased sales volume in key markets such as Hong Kong, bank interest income decrease, and government grants decrease have contributed to revenue decline. These factors can have a significant impact on a company's bottom line, making it essential for businesses to monitor and adapt to changes in these areas. In addition to these primary drivers, other factors such as economic conditions, consumer sentiment, and competitiveness also play a crucial role in determining revenue growth or decline. Companies must be aware of these factors and take proactive steps to mitigate any potential risks and capitalize on opportunities. By understanding the key drivers of revenue growth and decline, businesses can make informed decisions to drive their financial performance forward. The net income of the company experienced a significant increase, although the exact amount is not specified. This growth can be attributed to various factors such as improved operational efficiency, increased sales revenue, or strategic business decisions. On the other hand, the gross profit margin showed a slight decline from 84.4% to 84.2%. Despite this decrease, the company's gross profit margin remained relatively stable in 2025 at 84.8%, indicating that the impact of the initial drop was short-lived and did not have a lasting effect on the company's overall profitability. The company's financial performance suggests a stable trend in its ability to generate operating cash flow. According to the provided data, the company has consistently produced positive operating cash flow in recent years. In 2025, the company generated RMB 1,421,111 in operating cash flow, while in 2024 it was RMB 1,234,119. This indicates a steady increase in the company's ability to generate cash from its core operations. The consistent positive operating cash flow is a reassuring sign for investors and stakeholders, suggesting that the company has a solid foundation for future growth and sustainability. The company's debt level and interest expenses have undergone significant changes over the past year. Initially, bank and other loans decreased dramatically, dropping from RMB 320,000 to RMB 0 by page 249. However, this trend was short-lived as total debt increased by RMB 623,177 from RMB 3,084,446 in 2024 to RMB 3,707,623 in 2025. Despite the increase in total debt, interest expenses have actually decreased. Interest on bank and other borrowings plummeted from RMB 3059 to RMB 0 by page 219. Additionally, total finance costs dropped from RMB 5289 to RMB 2322 during the same period. Furthermore, interest expenses specifically decreased by RMB 92 from RMB 2230 in 2024 to RMB 2138 in 2025. The company's debt level has increased significantly, but interest expenses have actually decreased due to a substantial drop in interest on bank and other borrowings. The recent financial reports have revealed mixed results across various segments and regions. On the positive side, the Chinese mainland segment has shown significant growth, with a notable 30% increase in revenue. This surge is undoubtedly a testament to the region's economic resilience and potential for future expansion. In stark contrast, the Hong Kong segment has struggled, experiencing a substantial decline of 167% in revenue. This dismal performance raises concerns about the region's economic stability and may warrant further investigation into the underlying causes of this downturn. Management is outlining a strategic plan to drive growth and expansion for the company. The key focus areas include concentrating on core competencies such as branding, marketing, and product strategy, page 22. To achieve this, the company plans to establish an in-house production base by mid-2026, shifting part of outsourced production to in-house and focusing on core products like skincare and color cosmetics, page 24. The management team is also emphasizing the importance of expanding sales network coverage through offline channels and online presence, page 32. This will be achieved by focusing on color cosmetics, skincare, and fragrances for product development. Furthermore, the company aims to upgrade its brand portfolio with Mao Geping as the anchor brand, expand globally through a dual-channel approach, and position itself in the premium market, page 33. To support these initiatives, management plans to strengthen product design and development capabilities by constructing R&D centers in Hangzhou and overseas locations, page 34. Additionally, the company is investing in brand promotion and channel construction to enhance brand exposure, page 39. The overall goal is to achieve significant growth in profit from RMB 881.3 million in 2024 to RMB 1,205.4 million in 2025, page 40. The company has a history of paying dividends to its shareholders. In recent years, it has distributed significant amounts to its investors. For instance, in 2024, the company paid out RMB 1,025 million, which is a substantial amount compared to previous years. This indicates that the company's financial performance has been strong enough to support dividend payments. In addition to the large payout in 2024, the company also distributed smaller amounts in other years. In 2023, it paid RMB 250,000, and in 2021, it paid RMB 40,000. The payment in 2025 was RMB 352.9 million, which is a notable amount as well. Overall, the data suggests that the company has been committed to rewarding its shareholders through dividend payments. There are concerns about inventory buildup in several areas. Pages 37 and 210 indicate a potential for inventory buildup, while pages 76, 210, and 211 explicitly mention it as a concern. Additionally, page 234 expresses similar concerns. This buildup can lead to increased costs of inventories sold, as seen on page 218, where the cost rose by plus 161,368. However, there are limited concerns about supply chain disruption. Pages 37 and 122 mention potential risks, but they do not explicitly state a concern for supply chain disruption. Page 76 mentions potential delayed deliveries, which could be related to supply chain issues, but it is not clear if this is the case. That concludes the financial summary for Mao Geping Cosmetics Co. Limited. Feel free to comment below, and I will be happy to answer them when possible.